3 ways to stop blowing your trading accounts and to develop the habits needed to be a top 1% trader. The first is to stick to a trading plan. Having a well-defined trading plan is essential for discipline and consistency. A good trading plan should include entry and exit strategies, journaling, a trading schedule, as well as an idea of what you want your risk to reward to be on the positions you are going to be taking. When it comes to entry and exit strategies, you want to have clear defined criteria for entering and exiting trades based on your trading strategy. A trading schedule is a schedule of when you're going to be in the charts looking for trades to avoid impulsive entries outside of your trading plan. It's really important to be consistent in the markets, and you want to find a trading strategy that works for you, and it's important to stick to that. It's important to keep a journal of your trades that you've taken so that you can look back on it, see what you've done right, see what you've done wrong, and look at where you can ultimately improve on your trading. I find that a trading journal is super important and helpful for tracking your trading and really holding yourself accountable for all the things you're doing right and wrong in the market. Now, when it comes to risk to reward ratios, you're going to want to establish a minimum acceptable risk amount for your trades that you're going to be taking. A good risk to reward ratio will ensure that your potential profits are outweighing your potential losses. That obviously goes without saying that you will need a good strategy to pair up with your risk to reward ratios. Now, that's really all there is to it when it comes to sticking to your trading plan. You're just going to want to have defined entry and exit strategies, good risk to reward ratios on the trades you're taking. You're probably going to want to keep a trading journal so that you can track your progress and analyze that information to improve as a trader overall. And lastly, you're going to want to have a trading schedule that you are disciplined enough to stick to so that you're not impulsively entering the market and potentially setting yourself back. The second way to stop blowing your trading accounts is continuous learning and adaptation. What that means is you never want to stop learning and improving your skills as a trader. And you also have to adapt to what is going on in the market and improve on the things that you're doing wrong. Treat your losses as lessons, learn from your mistakes, and you will be on your way to being a top 1% trader. It's very important to keep educating yourself and improving your skills. You can never have too much knowledge, whether it's from YouTube videos, websites, courses, webinars, books. Doesn't really matter. It's very important to keep furthering your education and improving as a trader in that way. It's also very important to analyze your progress, analyze the trades you're taking. Going back to what I previously said about the journaling, you want to track your progress and go back and really improve on the areas that you have been lacking. If you have a trading journal with all of your trades taken, wins and losses, you can go back, see what you're doing right, see what you're doing wrong, and this gives you a really good opportunity to learn from your mistakes and turn them into lessons so that you can improve and adapt as a trader. You're also going to want to learn how to improve your emotions as a trader. Managing your emotions is also a very tough thing to do in the market. Continuing to learn, improve, and adapt your trading is really not that difficult of a thing to do. You just need to put the time in and grind it out, and the results will eventually come. Now, moving on to the third and final way to stop blowing your trading accounts and to become a top 1% trader, and that is good risk management. I'm sure you've heard it before, and if you've been watching this channel, you've definitely heard it before, but risk management is super important. In theory, it's not a difficult thing, but when it comes down to it, most traders struggle. In order to stop blowing your trading accounts, you're going to want to use proper position sizing, set good stop losses, and avoid the temptation to over leverage. Like I said, in theory, these things aren't difficult, but when it comes down to it, it really does get challenging. So I'm going to break this down a little bit for you guys. Position sizing is how much you're going to risk on one position. Now, it's very important to use proper position sizing. Keep it safe and keep the risk low. Personally, I like to risk between 0.5% and 2% of my trading account on a trade, but everyone's risk tolerance is different. I wouldn't recommend risking much higher than that on a position because if things weren't to go your way, you are going to be taking a bigger hit to your trading account. By keeping the risk low, you really are eliminating a lot of the emotions attached to the trade, as well as you're obviously protecting your account much better. Now I'm going to talk about stop losses. Stop losses can be a tricky thing sometimes. In my opinion, I think it's very important to always use a stop loss. There are traders out there who won't use a stop loss. I think the number one thing is you should definitely use a stop loss, and it's very important that you get used to placing your stop loss in the appropriate place. It's very easy to enter a trade with too tight of a stop loss or too big of a stop loss. So I'm going to explain how I like to set my stop loss in the perfect sweet spot. The first thing that I do, like I said before, is use appropriate risk on the trade. That way, no matter where I set my stop loss, I know how much of my account I want to risk on that position. Now, one thing to keep in mind is experience does come into play when it comes to setting your stop loss. The more you trade and the longer you've been a trader, the more understanding you're going to have of how the market moves. So it's obviously going to help you with placing your stop loss, right? What I like to do is if I'm in a buy, for example, I like to set my stop loss below the nearest support level. That way, if price comes down to the previous support, I'm not going to get taken out because my stop loss is just below that level. And the same goes if I'm in a sell. If I'm in a sell, I like to set my stop loss just above the previous resistance level, which is the same concept, just flipped. Like I said before, experience is going to play a part in how good you are at setting your stop losses, but generally that's a good way that I like to look at it. You know, if I'm going to buy, keep that stop loss below that support level, and if I'm going to sell, keep that stop loss above that resistance level. That's generally a safe place to put it. It's obviously a situational thing. Every trade is going to be a little bit different, so you're going to want to adjust your stop loss a little bit depending on the trade situation, but for the sake of this video, that's a decent explanation of the way I like to set my stop losses. And then when it comes to over leveraging on your positions, I know it can be a tempting thing when you see a setup that you are super confident in, but it's super important to keep consistent leverage on your positions, not to over leverage your trades, because that is when you're getting into dangerous territory and increasing your chances of blowing your account significantly. If you keep your leverage conservative, you really are giving yourself a much better chance of protecting your account, not blowing it, and ultimately growing your account over time. That's all I got for you guys in this one. Those are 3 ways to stop blowing your trading accounts and to develop the habits of a top 1% trader. I hope you guys enjoyed this video and found it helpful. If you guys did, please drop a like and hit that subscribe button. Make sure you check out my last video on my 85% win rate trading strategy that I use every single day in the market to help me bring in hundreds and hundreds of pips every single month. Take it easy, guys. I will see you in the next one.